Quite the sell-off today from Fomc, and we actually sold off exactly on the COVID trend line. This is where the start of the sell-off occurred. We had a major rejection up here. I referenced this line before in previous videos, and I'll just show you really quick here. This starts at the bottom of the COVID crash. This is a major pivot because it formed a major low before rallying off of here. If you drag this across to the previous yearly low in June, you can see that we touched it today. And not only did we touch it today, we rejected very hard off of this level that you can see here in the box. And after this rejection, we closed at the low of day. So very bearish in terms of how hard we rejected off of this level, as well as the fact that we were under a ton of dark pool prints from this past week. Going to our dark pool levels feature here on Cheddar Flow, you can see we had $4.8 billion worth of premium at the 384.59 level. This now is $10 a share over where we are right now. This is signature print, so they were coming in the day before, so it's around this range over here. And not only do we see that, which by the way, 4.8 billion, very rare to see this amount of premium go into it. So this is a lot. This is uncommon in itself just to see 4.8 billion. And not only that, in our previous days, we've been seeing billions as well. We saw 2.9 billion at the 386 level. Yet again, we saw another one that was relatively up here. And from this entire past week, we've seen a billions of premium hit the tape in the dark pools between this box right here, about 379 to 389. The fact that we are below it now is certainly concerning, and as long as we stay below, it is subject to more bearish emphasis. Again, if we go back to previous days, not only November 1st and November 2nd, we go to the 31st here, you can see 4.1 billion at the 389 level. We are seeing a lot of premium. Guys, this is very, very uncommon. We've only seen premium like this all in like 1 week, over the course of 1 week, only one other time this year. We've only seen this sheer amount of dark pool prints hit the tape within a week time span all the way back in March of this year. Other than that, it has not happened this year at all. If you remember, this was end of March, early April. Back here, we saw over 15 billion plus of signature dark pool prints within this week. After this, look what happened. Huge sell-off after. So we certainly need to be careful, especially as long as we're below this purple box right here. Now it can retest as it did back in end of March and everything, and you do want to look for confirmation at the very least that it stays below the box, because if it goes above, then the inverse can happen. But as long as it stays below the box, it is subject to some more bearish emphasis, like I said before. So do watch this. Do watch the range between 379 to 389 as we go forward from here, and it's going to give you a great reference point of risk and potential downside from here. Something else I want to reference here, we had 3 fake outs of this channel for QQQ. So tech is looking fairly weak right now. We had our first fake out where we closed above the channel back here on October 28th. We closed above, gap down back into the channel. So that shows that this was a fake out. Then it attempted again after a big gap up and sold off yet again. So a lot of weakness up here around that 282 level on QQQ. Sold off both times. And then the third time happened today after FOMC. It ended up pumping up and then rejected very hard at the same time as SPY got rejected from that COVID pivot level. Rejected hard, fell back into the channel, and then had to retest the lower end of the channel later. So as of now, as long as we stay below this channel, it is subject to some more bearish emphasis. So continue to watch this channel here for reference of emphasis in terms of bearish. If it goes back inside, this would be relatively chop, and then if it were to, for whatever reason, go back above, that would be bullish. But as of now, as long as it stays below, it is bearish. Also, I want to talk about DXY here. You guys know that I like to look at DXY to kind of get an inverse scenario for the S&P 500, because typically we see equities rally when the dollar falls and vice versa. And in this case, it looks like we are about to retest this trend line right here within this box because of the strength that it's showing right now. And if we go to the daily chart here, this trend line is very critical. I've referenced it in previous videos, but most importantly, I want to see how we retest this level, and I want to see, will it be able to get it back above or get rejected? This is very critical, because if DXY were to break back above and get above, let's say 113 even, especially on a daily close and hold above, that would be very bullish for DXY. And basically, that would leave a lot more sell pressure in the general market. Otherwise, though, there's still the possibility that we retest this level, kind of similarly to how SPY retested the COVID trend line, and then it gets rejected afterwards. And if this were to get rejected, this would help with the bid in the market. So this kind of level over here, especially between 112.50 and 113, very critical range. I want to see what happens. It's going to provide a lot of insight to know if we are getting rejected off of this retest or if it's going to have a lot more continuation. That's going to give us a good sense on the general market. Something very notable that I found is the comparison to back in end of May, early June. This is a very similar chart structure, just with a little bit more extended time that we had back here. You can see we had the first kind of like run up in a sense, with then a lower low that was made after a sell-off. Following that, same thing happened over here. We had a little run up and then a lower low was made after a sell-off that occurred right after. Again, it took just a little bit longer for this sell-off to form, but still the same type of price fluctuation as we had back here. Then following the lower low, we made a new high in terms of over this this like hump that we had over here. And the same thing happened over here. We had a new high that happened after this little run up was broken to the upside. And then afterwards we saw consolidation, and a pretty tight consolidation that is. Same thing kind of happened in this sense. We saw consolidation here, not quite as tight as over here. However, funny enough, around day 3 consolidation, we had a big green candle to the upside. Same exact thing happened over here on day 3 of consolidation, big green candle to the upside, and then eventually we did end up selling off pretty hard afterwards. As of now, we had the same thing with the green candle, and then afterwards we did sell off as we are right now. So the question is, will we have that confirmation lower for some more lower prices to happen fairly soon? That's the question right now. We do want to see confirmation under the box that I showed you earlier on SPY to get a sense on if it was in fact selling, especially if we stay under that box. But as of now, there are a lot of similarities to both of these structures. So I am going to be watching this, especially if it has a similar outcome to what happened before, because that could mean a lot more downside and a new yearly low potentially within the next few weeks. The last thing I want to talk about today is the VIX. We had an odd day on the VIX, and that's because we didn't see much fear, or we didn't see that much upside at all. It was only up 0.19% on the day, considering how much we sold off intraday. So it doesn't seem like there's as much fear right now during the sell-off. So we do want to see, at least if you are a bear, you're going to want to see the VIX pick up a bit in the next couple days, and that will show some form of confirmation. I always reference confirmation. You do want to make sure that you stay under certain levels in terms of the general market, like SPY. You want to make sure you stay under levels to show that it is confirmed that you're around those levels and it doesn't get picked up very quickly. The same thing applies for volatility. You want to see volatility start to pick up here, because if it stays stagnant like we have down here, that is the complete inverse to what the market's doing, and there's potential for some form of a reversal. So especially to finish off the week, if you are a bear, you do want to see the VIX catch a bid, because as of now, in terms of just the VIX just chart, it does look bearish at the moment to the lower end of this pennant. But obviously with what we saw on SPY today, there was a large sell-off. So I'm going to be checking the VIX pretty carefully, along with what I showed you on DXY. I want to see what happens when we have that retest of DXY, and also if the VIX is actually going to start picking up compared to how SPY has been falling down so far. So some things to note for the rest of the week, as well as early into next week. As always, make sure to use correct risk mitigation principles, and I'll see you guys on Sunday for the weekly recap video.